Welcome to the Industry Experts Panel weekly show at PortfolioWealthGlobal.com. My name is Michelle Holliday. We have a great interview for you today, and you might want to listen to it over again a couple of times because our guest today is an expert on the thing we love the most. Taxes. The largest expense in life that we all face is not mortgage payments, it is not food and not clothing, it is taxes. And knowing the basics helps us to plan better and to live better within the means of the law. Today's guest is Moshe Amsel. He is an accountant, a business profit strategist, and a tax consultant. Moshe is the owner of Dream Builder Financial LLC, a full-service accounting firm offering tax and profit consulting as well as virtual CFO services to online business owners. Moshe, welcome to the show. How are you today?
Michelle, thank you so much for having me. I am doing fine. Thank you.
You know, as we're doing this interview, the largest economy on the planet, the United States, is entering tax season. So I want you to be brutally honest and help our listeners to become savvy. The first question I have for you is this. A record number of people are starting home-based businesses, and they're facing a big hurdle at the very first step. They don't know how to best incorporate legally or tax-wise. How important is entity creation, and what are some of the most common mistakes that people make that we should avoid?
I'm actually going to start answering the question by answering the second half of the question first.
Okay.
The biggest mistake that you can make when you're first starting your business is to put your head in the sand and say, "Oh, I don't need to worry about that right now." Not thinking about it and not understanding the differences and just carrying on puts you straight into the mode of sole proprietor, which may be the right entity for you. But at that point, you don't have a choice. So the best thing that you can do when you're first starting out is to really understand why you would want to incorporate, what type of entities there are out there available to you, and make that decision up front. Now, you may make the decision to not do anything right now and do something in the future, but at least you did the research and you understand why you're making that decision. Now, just the most common entities that people would choose is either a corporation or an LLC or a sole proprietorship. So I'll speak briefly on each of those real quick. The first thing that you need to understand is those are legal differentiations. They're not tax differentiations. So they do have tax ramifications, but the first question of whether to incorporate and how you decide which entity to choose should be first addressed from a legal perspective. So the purpose of creating either an LLC or a corporation is to basically separate your personal financial life from your business financial life and give you protection. It's asset protection, it's future income protection in the event that your business generates a liability, whether it be through a lawsuit or a big loan that you renege on, you go bad on. Something like that, that then they can come after you personally. So once you form an LLC or a corporation, you're creating a separate legal entity, and they don't have any right to go after you as an owner of that entity. They only have a right to go after the entity itself. So an LLC and a corporation sound very similar. So why would you choose one over the other? So some states have their own individualized laws that might affect your decision one way or the other. So the best thing to do is to spend a little bit of money to meet with an attorney when you're first starting your business, a local attorney, or someone who's well versed in all of the various states so that they can guide you in the right direction. But there are other differences that would apply to everybody, and that is, if you're planning on creating a company that you plan to take public, you don't want that to be an LLC because an LLC doesn't have shareholders the same way that a corporation does. It does have shareholders, but they're called members. It's not scalable to the level that you need to bring in VC capital and then in the future bring the company to the market. If you're going to be a sole proprietor, or you're going to have just a handful of partners or investors that are not actively involved in the business, an LLC might be perfectly appropriate. There's a lot of simplicity in the paperwork if you choose an LLC over a corporation. So if you don't need the the complexity of the corporation, you're probably better off with choosing an LLC.
Hmm.
Now, from a tax perspective, there is a difference between an LLC and a corporation. The difference is as follows. A corporation is taxed twice. So basically, the corporation has its own income tax that it pays. And then when money is distributed from the corporation to the shareholders or the owner, whether it's as a paycheck or as a profit distribution, those are going to be taxed as income to the owner again. So the corporation gets taxed, the owner gets taxed. There
Wow.
is there is a protection available, which we'll talk about in a moment, but an LLC is a pass-through entity from a tax perspective, which means that even though you have a separate entity, you're going to file your taxes directly on your Schedule C in your personal income tax return. So you're just going to take the information from your LLC's profit and loss statement and you're going to put it into your personal income tax return, and that's how you file your taxes. So you only get taxed once on an LLC. The IRS has a designation. It's not a legal designation. It's simply a tax designation, and it's called an S corporation. And an S corporation is an election that a corporation or an LLC can make to be treated as an S corp. And an S corp is limited in its size. It's a max of $10 million and a max of 100 shareholders. So once a corporation exceeds that, it can no longer be an S corp. But until then, electing to be treated as an S corp gives it the pass-through entity that the LLC has naturally. So the question that people ask at this point is, why would I choose to make my LLC an S corporation? And it's a very good question because it seemingly just creates more paperwork and doesn't really give you anything extra. So the reality is that the S corp does make the entity a separate entity from a tax perspective, whereas the LLC was a pass-through entity, and that allows you to differentiate the pay that the owner is bringing home, and you can now separate between salary and profits. And we can set the salary based on what it would cost for someone else to come in and do their job. And even though, so let's say for example, it would only cost $50,000 to replace their income, but they're bringing home $100,000 from the business. The S corp gives us the ability to separate that from a tax perspective and make $50,000 their income and $50,000 a profit distribution, and that saves them the 15.3% on that extra, the second $50,000
Oh, wow.
of the self-employment tax, which is your Social Security and Medicare tax. So once a business has achieved a certain level of success, it would make a lot of sense to pursue an S corp. There are also instances where it might make sense to start off an LLC as an S corp from day one, even if there isn't a lot of income in the business at that point, because there is also a way to shelter income during the startup phase from being considered payroll. So it's specific to the entity. So I don't want to throw out any blanket statements,
Right.
but you do have options there, and this just highlights one of the reasons why it's important to have an accountant, have a tax professional that you start consulting with right at the beginning, at the onset of your business. The biggest thing that people do is they wait too long,
It's
and
great
then they
advice.
end up missing the opportunity to take advantage of various tax savings that they could have had from the get-go.
Right. Moshe, how can someone figure out, according to his own needs, which accounting platform to choose? And what are some good qualifying questions to ask when someone is looking for a good CPA?
Okay, so once again, I'm going to answer your question backwards. So
Okay.
I seem to like the second half of these questions,
There you go.
but um, basically, when you're choosing an accounting platform, a software platform, you want to choose the one that your accountant that you chose is using, right? So it's which came first, the chicken or the egg. You want to choose your accountant first, your platform second. Now, let me explain to you why. I'll give you a brief example that I've heard from some other accountants who speak in the industry. And the examples like this. So let's say you have a brain tumor and you need to seek out a surgeon that's going to operate on, open your skull up, go into your brain and take out this tumor. And this tumor is lodged in a really difficult place in your brain to get to. So you're not going to go to the neurosurgeon in the local hospital, right? You're going to do
Mm.
extensive research. You're going to look all over the country or the world, and you're going to hand select the top neurosurgeon that you can find and afford to operate and take this tumor out for you. So you finally go through all that research, you choose your neurosurgeon, and now you go to meet with him, and he says that he's going to use procedure XYZ to get the tumor out. And you turn to him and you say, "Oh no, I heard that procedure is, has a lot of risks involved and doesn't have such a high success rate. I want you to use procedure MNO." Right?
Mhm.
You're not going to do that because you just spent all this time choosing this neurosurgeon because he is the best. He knows what he's doing. If he
Yes.
tells you procedure XYZ is the procedure you need to use for this specific case, then you're just going to do it because you spent all this time choosing him for that reason because he's the expert. He knows. So choosing the accountant is the same thing. You're going to spend time researching and deciding who your accountant's going to be. Once you do, you've done your due diligence to decide that this accountant is the right fit for my business. At that point, you're going to turn to the accountant and you're going to say, how do I set up my books?
There you go.
What software should I use? What software
Mhm.
do you support? If the accountant says, "Well, I don't support QBO," which is QuickBooks Online, I only support Zero, and that's spelled XERO. So for the people who are not familiar with the platforms, I'm throwing out these terms. I just want to make sure I define them.
Sure.
So, but if the accountant says, "I don't support QBO, I only support Zero," and you're like, "Oh, well, I heard QBO is the best accounting platform. I want to use QBO." Well, go use a different accountant. So you have to first choose your accountant and then choose your platform, or else you might be limiting who you can work with because you chose a specific piece of software, which doesn't make any sense at all.
Great advice. Great advice. Now, Moshe, when you're just starting out, even if you've been filing taxes for a while, there are good clients and there are bad clients. And I get to ask you as a CPA, what makes your job easier? What is your ideal client in terms of conduct? And I ask you this because listeners who take your advice and become low maintenance types of clients always seem to get the best treatment.
Right. Well, I'm not going to speak to the comment at the end. I treat everybody with white glove service.
Yes, there you go.
But but it is the reality. If somebody's a pain in the neck, they're a pain in the neck, right? You don't want to take their
Mhm.
calls. You don't want to deal with them. But to answer your question, the ideal client is going to be somebody who is able to recognize the fact that the accountant brings a lot of experience and knowledge to the table and they know best, and therefore they're going to take everything that they say seriously. It doesn't mean that they're going to listen to everything that they say, but they are going to listen to everything and say, okay, now let me evaluate what I'm going to do. Entrepreneurs in general know how to do everything, right? That's what we believe. So when you start a business, okay, I've been reading magazines. I know enough about taxes to make the right decisions for my business. I know enough about books to be my own bookkeeper. And those decisions are made in all areas. I know how to hire people. I'm just going to do it myself. I know the best compensation for people. I'm just going to decide that myself. When entrepreneurs try to do everything themselves, they do nothing well. When
Mm.
you start your business, you started it for a reason, and you're either really good at something or you're really good at a certain process. And that's your impetus for saying, okay, I can be a business owner because I'm really good at this, at X, Y, and Z. And it's a constant challenge for business owners to always analyze what they're doing and make sure that they are focusing most of their efforts on the thing that they're really good at and outsourcing the rest. And it's hard when you're first starting out to have that mindset because outsourcing costs money. So you're trying to save as much money as possible by doing everything yourself. But there are certain things that just make sense to have someone else do for you. So once you bring an accountant on board, now the accountant is going to give you advice. He's going to direct you on how you should do certain things. The best thing that you can do is to consider those and hopefully listen to them. So my ideal client is somebody who wants to succeed and they recognize that I am not just there to do their taxes for them. I'm there to be a consultant in their business, and I have an extensive business experience because they're looking at one business and only one business, where I may be looking at hundreds of businesses every month. So I'm exposed to a lot more business challenges than they'll ever be exposed to. And therefore, if I have input on the next hire that they're going to do, even though it has nothing to do with taxes or bookkeeping, uh, I probably bring a lot of value to the table and they should consider my opinion.
That's great advice. Now, I know that you've coined the phrase implementing profit first. What is that, and what is wealth planning and creation?
Okay, so wealth planning and creation is certainly something that I implemented or coined myself, although there's plenty of people out there who are doing it. But profit first is not my term. So there's an author, Mike Michalowicz, who wrote a book called Profit First. And in that book, he introduced a cash flow management system for business owners that takes into consideration the human nature that we have as business owners. So um, typically, a business owner wakes up in the morning and they don't go into their QuickBooks software and run a profit and loss statement to see how they're doing. They will log into their bank account and see how much money is there.
Mm-hmm.
And based on what's in the bank account, they're going to make crucial business decisions. And usually that's the wrong place to look because it doesn't reflect money that you owe. It doesn't reflect outstanding checks. It doesn't reflect money that's still coming into the business. It only reflects how much cash you have that morning. And what happens is that because of they're operating their business this way, which Mike Michalowicz calls bank balance accounting, which I love that term, because they're running their business this way, they're constantly spending more than they really can because they think they have more money than they really do. So the profit first system is basically a series of bank accounts where as money comes into the business, it gets funneled off for the various reasons that you need to funnel off: your profit, your owner's pay, your tax account. And then what's left at the end, that's your operating expense account. And that's the account that when you wake up in the morning, you want to log on and look at the balance of. So when you're looking at that account, now everything else has been removed. Now you have a true picture of, or at least a truer picture of the money that's available to you to spend in your business. And you'll be making better business decisions because of it. So I am a profit first professional. He has an organization where they provide support to us to give us advanced training in this system, and I help my clients implement it. The clients who are do-it-yourselfers, I basically just teach them the system, and I walk them through an initial assessment, an analysis, and a plan of how to get to the end goal of adjusting the percentages of where all this money is going into each of these accounts. And the ones who don't want to do anything themselves, they hire us to do it all for them, and we'll actually move money around for them between their accounts to conform to the system. And it basically does a complete miracle makeover on businesses who might be living paycheck to paycheck, and
Wow.
suddenly they're taking profit home and their business starts growing significantly and exponentially, because it completely takes away that whole mindset, cash emergency that
Mm-hmm.
businesses are constantly in. As far as wealth planning and wealth creation, I believe that somebody started a business for a reason, and usually that reason is not because they want to run a business. Usually the reason is because they have a dream that they're trying to achieve, whether that be philanthropy, leaving a legacy to their kids, or simply just having time to spend with their family, or just being able to go on vacation or buy a second home, So whatever the dream that motivated you to start your business in the first place, I want to help you get there. So I don't want you to come to me just to do your taxes. I want you to come to me because we are going to work together to find a way to get you to your end result, to your dream. And it's a lot more than just your business. It's your personal finances. It's the way that you handle the excess cash that's coming into your business. So wealth creation, I use a three-step process. So basically we take the money that comes into your business, and once you're generating a decent profit, we're going to start taking some of that money and putting it into a tax deferred account, and then we're going to use those tax deferred accounts to give you some asset diversification. So we'll put some of that money in the stock market, and then we'll borrow against those accounts to purchase real estate outside of those accounts, or in some cases we might even buy real estate in a self-directed account and keep it in the tax deferred account.
Oh,
But
wow.
real estate gives its own tax benefits, so it makes a lot of sense to invest in real estate outside of a tax deferred account. But using leverage, you can really enhance the profit that that business is bringing in and create multiple streams of income for yourself that are outside of the business itself. And that's just planning for the future, because your business, you're either going to sell it eventually or pass it on to your, the future generation, or you're going to close up shop. So the business itself is an asset, but it shouldn't be your only asset. And never have all your eggs in one basket. And this gives you a lot of leverage from a tax perspective, because you're really sheltering a lot of money from taxes by following this method. And I help my clients walk through that. So when you're first starting your business, you're not thinking about this on day one, but we don't want you to lose sight of what your dream was, and we want to make sure that you stay on top of that throughout your business building process, so that at the end, 10 years into it, you don't look back and say, what have I done? All I've done is
Right.
create a job for myself. But instead, you now have an empire you've created.
Beautiful. Moshe, for people who have the ability to relocate to tax favorable states, what are the best and worst locations to live in?
Very good question. So um, I I can't give specifics. I could tell you something. I mean, the first thing is that there are 7 states that don't collect an income tax from their residents, and those states are Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming. So right off the bat, I mean, I live in New York, so my state tax takes another 6% out of my income. So if I were to move to Nevada, I'd be 6% richer right off the bat. So for somebody who has an online business, which my ideal client does, they could operate out of any state. So relocating would make a lot of sense for them, because they are still pulling clients from everywhere. However, people who move to Nevada and have a brick and mortar business, a retail store, a business that's local to the local economy, all local economies adjust for the environment they're in. So the fact that you don't have a state income tax in Nevada is not going to necessarily mean that by moving to Nevada, you are setting yourself up for better success. There's a reason why people move to Manhattan, even though it costs, $4,000 or $5,000 to rent an apartment, and they pay, a gazillion dollars in taxes. They move there because there's a huge economy there, and the pay is much higher, and the potential for business is much greater. So it's all about the economy that you're in. So if you have a business that's truly not location dependent, then it does certainly make sense to look at where you live, and potentially relocate your family to a better state. The other piece of the tax equation to look at is if you're selling retail, if you're selling an item that you need to charge sales tax on, going to a state that doesn't charge sales tax would actually make it easier for people to buy your product or service. So that's another consideration to have. But again, we go back to the original thing, which is, what's your dream? And if your dream involves family, and your family is, where you are, then moving to another state just to save some money on taxes might not be aligned with your goals of what you originally set out to do with your business.
I see. Lastly, what is a very simple action, if people knew it was possible, that would be absolutely worthwhile to do in regard to taxes?
So I'm going to be a little bit cheesy with the answer here.
Okay.
And the simple action is just to be involved. Don't, like I said earlier, don't stick your head in the sand and just make believe it doesn't exist. Taxes are there, and you know, I, our current president Donald Trump made a statement in one of his debates, and he said, I don't pay taxes because I'm smart. Now we can debate that statement, and whether it makes sense or not. But if you look at somebody who is as wealthy as Donald Trump is, and for him to make a statement that he doesn't pay taxes, obviously those of us who are paying taxes are doing something wrong, right?
Mm.
So I'm not saying that nobody should avoid people should avoid taxes and they shouldn't pay them, but I am saying that there's a ton that you can do in regards to taxes to limit your tax liability. And if you just ignore it, you're not going to be taking those steps necessary to do it. I'll give you one very easy example.
Okay.
I've got teenage daughters, right?
Mhm.
So instead of me hiring a virtual assistant to do some work for me, I can hire my daughters to do the work. So
Hmm.
I am now paying my children, right? So I'm keeping the money in the family. They're enriching their lives because they're learning
Exactly.
to work and to earn money. And the first $1,900 that they earn is tax free. So I'm writing it off as a business expense, but they're earning the money tax free. Then they can turn around and put that money into a Roth IRA because you need to have earned the money in order to put it into a Roth. And a Roth IRA is tax sheltered for life. So now that money can grow in the stock market or a self-directed Roth, and it can grow somewhere else, and they can earn all of that income on that money free. And at the end, they're withdrawing that money tax-free in retirement. So
Wow.
now I've taken, money that came into my business, and I've basically never paid tax on it throughout that entire process. And it's just, without realizing that you can do that, without knowing it, and it's not for everybody. You might not have kids old enough, or you
Mhm.
might not want to put your kids to work in your business, or you might not have work for them to do. But knowing that you can do that, uh, you know, can potentially shelter. Let's say I've got my three daughters working, and I give them each $2,000 worth of work, right? So now I've got $6,000 of business expenses that I'm not paying taxes on. What did I save? If my taxes, between my self-employment, tax and my state tax and my federal tax, if my taxes are 40 or 50%, I just saved somewhere between, uh, and $2,000 and $3,000,
Yeah,
right?
right.
So that's a lot of money. So
Sure.
looking at it the other way, I gave my kids $1, and every time I gave them $1, it only cost me 50 cents.
Beautiful.
Yeah.
Moshe, you are a world of knowledge. I appreciate you so much for taking the time to be with us today. How can people who are interested in your services find you online?
So that is a really good question. So I'm gonna actually throw three different options out at you. So first of all, I do host my own podcast, and the name of the podcast is Dream Builder Financial. Those are three separate words. So if you go into iTunes or Stitcher, just do a search for Dream Builder Financial. It'll come up. And in there, my show is broken down into three segments. So I have a personal finance section, a business section, and a tax section. And it's done like that because I'm trying to cater to exactly what my my business model is, which is to help clients in all three of those areas. So I encourage you to go and subscribe to that, listen to it. The second thing that I'm going to do is give you a URL that you can go to book yourself on my calendar. So if you're looking for an accountant and you think that we might be a good fit, we can have a free phone call, no strings attached. We actually do it through video conference through Zoom. But basically, if you go to dreambuilderfinancial.com/call, CALL, there you'll be taken directly to my calendar, and you can just schedule a call with me. And then the final thing is I have a guide that I've created, and this is specifically for people who are just starting out, and they're looking to understand what they need to know about taxes. What are some of the pitfalls they need to know about? And it's a guide that I've titled Five Tips, Five Tax Tips Every New Business Owner Needs to Know. And you can go to dreambuilderfinancial.com/five tips to download that.
Wonderful. Moshe Amsel, thank you so much for joining us here on the Industry Experts panel. Until next time, I'm Michelle Holliday at PortfolioWealthGlobal.com. Taxes are, in Portfolio Wealth Global founders Tom Beck's view, an investment which can either end up costing you money or saving you money. Throughout the course of a lifetime, it adds up to a considerable savings. As with anything, Tom sees taxes as unrelated to his own core skills. Therefore, he outsources his tax issues to a professional and frees up his own time to do what he does best: investment research. Right now, Tom, Lior, and the team have uncovered that the Trump administration is putting to work many funds to help the biotechnology industry, especially the field of personalized medicine. Go to portfoliowealthglobal.com/ Trump stock to see which patent-based company is at the top of our list of companies to watch. We've received many inquiries into our views of the marijuana industry as well, in regards to the amazing investment opportunity it presents. Lior, Tom, and our cannabis analyst have written an exclusive report on the subject at the Exclusive Reports tab on the main menu, as well as on portfoliowealthglobal.com/cannabis potential. If you would like to get a taste of Lior Gantt's personal portfolio for 2017, listen to the interview I conducted with him on our YouTube channel, as well as take a free copy of the PDF version at portfoliowealthglobal.com/365globalwealth. Next week, we will be back with another amazing guest on our show, a cutting-edge CEO who will be sharing his own expertise with us. You'll definitely want to tune in. Until then, thanks for joining us. I'm Michelle Holliday at portfoliowealthglobal.com.